you could get a bounce on WTI up to maybe 105, 110. But I think, new highs and all that, that's finished. Equity markets look really sick. And everybody, I think, here in France, everybody's completely complacent. I mean, it's like, nothing is happening, nothing is going on, prices are rising. You don't even want to know what the price of fish is in France. But I'm telling you, it's like watching it's like seeing people, it's delusional, I think. So I think you're going to get a big reckoning that's coming. And I'll be looking, whether we get this bounce to 105, 110 is debatable. But after that, I think we're heading straight down to $60 WTI, whatever happens with, I don't know, virus or Iran or war or whatever it is. So I think we're headed lower. I think we're headed lower in terms of equities. We're headed lower in terms of oil. We're headed lower in terms of, I think the US dollar, the DXY is trading about 108. The euro is trading 102 to the dollar. I think that gets down to maybe 90. Maybe you see DXY go to 111, 112, but then the dollar takes a swan dive. So I'm not friendly to anything. I think a big kind of reckoning. I've always talked about this tsunami, and it's getting closer and closer. And I think people are going to be surprised by the severity, So we're quite negative. Everything.
Negative everything. I'm staying in the south of France comment. Kate Durian, Mies contributing editor and non-resident fellow at the Arab Gulf States Institute in Washington. Kate, it's a month since we've had your voice on the air, and OPEC Plus have been meeting. They've had a new Secretary General come into office. And while their meeting was fairly nondescript, their comments by the new Secretary General, I thought, were quite bullish. What are your thoughts on the relevance of OPEC Plus at this moment?
Well, I think what they're saying, if you listen to what they say in the statement they issued after the meeting, it's a bit of, I told you so, like there was no investment in upstream. You've been telling us you don't need oil, net zero forecast, etc. And now look what's happened. We've got two countries that have spare production capacity that are not willing, that Saudi Arabia and the UAE, that are not really willing to pump at maximum and leave the market exposed. So I think that's the only maybe bullish factor in the market. But at the same time, you've got uncertainty on demand. Particularly from China, you've got uncertainty on the supply side. So I think these two factors are sort of cancelling each other out. And yeah, I'm in London. I mean, I moved house. I had COVID in the middle of it. I mean, I've been off the grid. But inflation in the UK is so high. It's unbelievably high. I don't know how people manage. Energy bills are going up. So I think it's, with interest rates going up, I think you will see a slowdown, and that's going to impact demand. But the market is so uncertain. I think one of your reports said, because of this high volatility, traders don't even want to deal in oil, let alone other commodities. So long as this war carries on and nobody really knows where we're going to go next. You have high interest rates. I suppose the oil price falling to about 95 is probably a bit counterbalanced by the strength of the dollar at the moment. But again, that's because of speculation there's going to be another interest rate rise.
I love that phrase, fall into the lows of 95. How tragic that is. Osama Rizvi, energy and economic analyst at Primary Vision Network, sitting in Pakistan. Are you guys dancing on the streets that oil prices are at the lowly $95 a barrel, and your friends in Saudi Arabia were able to send you $3 billion?
Not really, Sean. Actually, it was the opposite. Last month, the government actually increased the petrol prices here, which was a surprise for everyone. But as I've said that on your show multiple times, we have a lot of internal issues going on as well. By that I mean fiscal issues. So even though oil prices fall into the lower 90s, and even if they stay there, I don't think that the government can really transfer that that relief to the public at large. And even though we have gotten some money from IMF, from our neighbors, as you might have heard as well, there is a lot going on here politically. Imran Khan might be arrested very soon. He has been declared a terrorist and whatnot. So political uncertainty is still elevated. And I think that is going to really, really mess up with our already decrepit economy. And, it's not really good. So we're not dancing on the streets, rather we're protesting on the streets. That's what's going
Testing on the streets. Osama, while you're off, you might just check your sound if you can improve your volume a bit. It's a bit weak. Omar, Kate's calling you a chicken. You guys, you traders, you've made so much money. Volatility, I thought, was your friend. I mean, what's going on? Volatility, there's still a lot of money to be made when it's volatile. No, is that not a case anymore?
It is the case, but you always got to balance kind of risk reward, right? So somebody comes and gives you like a big, I don't know, a big like ham and cheese sandwich and a big like tart and then a couple of croissants and some pain au chocolat and gives you like a white beer and then says, okay, so would you like to now go for another whatever? And your answer is no. So I think that's what you're seeing. Nobody wants to get involved because, everybody's kind of satisfied. I don't want to risk anything. So, sure, people don't want to be involved. But I think the bigger picture is that my view is, in terms of what's happening, is that everybody knows. I think European leaders know. I think the US knows. I think Russia, China, Brazil, everybody knows what's going on in terms of, there's this reckoning that's to come, that people are not kind of stupid. It's just that they're not kind of messaging that across to consumers. And I think soon enough, they're gonna basically see it. I think people don't worry about economies until they start losing their jobs. And I think that is coming. And when that comes, it's not going to matter about, supply and demand and all that kind of stuff. It's going to be the mood of people that's going to take these markets slower. They're not going to wait to see that, we can't get enough of this, or there's too much of this, or Iran's coming back, or Saudi's producing more. They're not going to care. What they're going to know is economies are tanking, people are losing jobs, and they're just going to sell, and they're just going to sell everything.
Kate, Kate, I just wanted to bring you in there. The reality is we've just given up the Ukraine premium for very simple reasons that Russian oil has never been disrupted. We're still at $95 a barrel. That's a very handsome price. That indicates a pretty tight demand market. Global inventories are well below 5-year averages. There's no idle supply around. Hey, 95, no Ukraine premium. So what's the big deal?
I think there is still a bit of a premium. I mean, I think prices should probably be lower were it not for the premium. And also, don't forget, we've got all these releases from strategic stocks that are coming to an end. And that has brought the price down a little bit. Now, whether the buying again to refill its strategic stores at a fixed price. The war's not over yet, and Putin still has a lot of cards to play. And yes, there is oil is still flowing, but then don't forget, later on this year, we are going to have these sanctions on seaborne crude, the embargo coming into effect in Europe. So whether that actually, you can't really have leakage when it comes to seaborne, trade with Europe. But pipeline is still going. It's the gas, really, that's the issue. We're coming into the winter season. We're approaching the winter season. And if you're going to have this reduction in Russian gas supplies, that's really going to have a huge impact on the economies of Germany, the UK, even France. I mean, I didn't realize that France is importing electricity from Germany. I mean, that's quite something. And of course, Germany doesn't want to restart its nuclear power plants. They want to burn coal. Coal is expensive. I think we're in for a very, very bitter winter.
Well, when you think of those things, it seems to me that they're more bullish than bearish for prices when you think even winter. Osama, news of the week this week, Whoa, whoa, whoa. Somebody's got us all sorts of noises going on. Is that me? I don't think so. But
Oh, no.
hello, hello, hello. 5, 4, 3, 2, 1. Osama, news of the week, it seems, waking up Monday morning here in the UAE with the news that the UAE ambassador to Iran is returning to Tehran for first time in 6 years. I wonder, does that tell us what does seem to be becoming fairly, better than 50% odds here that Iran nuclear deal will indeed be finally done? Your thoughts on that and what it means for the region? I think, Osama, that is your microphone, because when you come on, it sparks us. So can you mute, Osama? Osama, mute, and we'll go to Omar with that question. Omar, the geopolitics news of the week, starting the week, does look like finally, perhaps, or is it the boy who cried wolf moment again? Iran nuclear deal doesn't matter for the markets.
I think basically, look, again, so the Iran deal now, after a couple of years, I can't remember how long I've been here, it's going to get done anytime, blah, blah, blah. So now I think it gets done because basically the Americans have said that, if they do it again, if they renege again on the agreement, they have to pay like a fine. And they have to remove all sanctions, blah, blah, blah. But I think they keep the Revolutionary Guards on the terrorist list, which basically the Iranians don't really care about anymore. So I think a deal gets done. But all it does is displaces internally in OPEC who produces what. The effect on the market is nothing. But the effect is basically, again, it's not numbers, it's not demand and supply, because it all stays the same. The effect is psychological, sentiment-wise, right? So if you hear Iran's coming back, you're like, oh, so that's the effect. But in terms of supply and demand, nothing, which is, again, why sentiment as opposed to, anything else drives these markets. So I think, you might see the market sell off, but then again, I've just said, we're going to see the market sell off in a big way anyway. Whether Iran comes back, doesn't come back, whether Saudi does this, Iran does that, blah, 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 because it's not, OPEC is not driving the market. OPEC is, one of the factors, but the main factor is people actually buying and selling it. And they don't do it because they add up 1 + 1 and -2 and +7. They do it because of how they feel, sentiment.
Kate, Iran, a big story this week, perhaps for the direction of oil markets going forward. Other story this week coming is the Fed and the meeting of the central bank governors in Jackson Hole in Wyoming. Your thoughts on what impact the Fed and interest rates? We've had fairly dramatic announcements out of the UK. The direction of rates, what kind of a indicator that still is as regards the health of the economy and the markets?
Well, I mean, it's all about trying to tame inflation, but inflation isn't being tamed. It's all the uncertainty in the market, guesswork, that's why the dollar's up. And then you've got China going in the opposite direction when it comes to rates. And of course, partly because of their, the previous crash in the housing market, they're trying to, and, in a way, China is in election mode. Not that they're going to have an election, but, with Xi Jinping trying to get, an extension to his reign. So I think it's at the moment it's all very speculative, but it's highly likely that we will see another interest rate rise, and that's going to have an impact on maybe equities markets. But when it comes to oil, I think it's relatively bearish because you've got this combination of inflationary pressures and economic slowdown. So it's a very, very difficult situation. The dose you give to the global economy, which is slowing, and I think that's there's no simple answer, I think, and even the central bankers themselves are at a loss to sort of figure out how best to tame inflation without really, really damaging consumer confidence.
Well, you can't have your cake and eat it there. Omar,
Mm.
the Chinese outlook, of course, another big factor for perhaps the direction of travel here. It is the world's biggest oil importer. It has been, under difficult circumstances, most principally the COVID policy. If they were to migrate over the coming months as this re-election of Xi gets behind us, China could ease its policy on COVID, and suddenly you would have a lot of economic activity back, and with the obvious demand that brings, would that not give you some confidence that there could be an upward movement on price coming into the end of the year?
No, because I don't think that it's to do with China or COVID or any of these things. I think basically people like to point to it and say, oh, the market's up because COVID and the market's down because COVID, but no. So I think basically...
Yeah, but all these things indicate the sentiment as you talk about. I mean, China lifting the COVID policy is a sentiment of somewhat economic optimism.
Yes, but basically you have to understand that China doesn't have these huge, massive debts like the West does, right? So China has an economy, a real economy, which is always functioning. It has basically a market, an equity market, which is tiny in comparison to their real economy. So their real economy really hasn't been that badly impacted, not manufacturing. They've had problems with housing and that kind of stuff. So their economy is not so bad at all. If I was investing in anything, I would invest in China. The West has basically massive debt. The economy, the real economy of the West compared to the equity markets of the West is like a pea and a football, right? And that was never the case. So you can, so that's why, they don't know what to do, because if they raise interest rates, everything blows up. And if they don't raise interest rates, inflation goes up and everything blows up. So the main point is everything's going to blow up. In China, it's totally different. In China, they have a real manufacturing economy, which is the size of a football, and they have an equity market, which is the size of a pea. Therefore, they can put money in, take money out, put this, do that. It's not a problem. So I'm afraid that basically, China is already, biggest buyer, will continue to buy, but it's not going to make a material difference. What I will be betting on soon is that the implosion that we're going to get in Europe is going to be so massive that it's going to take so much demand out that basically that is what's going to make the difference to the downside. So China is already, its manufacturing economy is all there. People, want stuff, blah, blah, blah. Hence inflation in the West, people are paying up. If you look at the inflation in the East and the West, they're two completely different things. And the question is why? It's because energy prices, commodity prices in the West are skyrocketing. And the question is why? And you get back to sanctions. Sanctions have been a total and complete failure. Now, as we move into winter, consumers, people will understand. And so you'll start seeing governments disappear, like you saw in the UK, like you saw, Macron lose the parliament in France, and you'll see it everywhere. And you'll see Biden lose or his party lose, et cetera, which will bring new leaders, which won't be so Russophobic and will basically go. I mean, I think at the end of the day, what you're going to see is the EU and NATO bend the knee and kiss Putin's ring. I really think that's what you're going to see. It's going to be fascinating to watch. And the convoluted arguments as to why and how, and really we are freedom and all this kind of stuff. So Putin invades Ukraine, and he's a really bad man and it's genocide. But, the West invades Syria, Iraq, Yemen, you name it, and nobody says anything. It's like, oh, no, it's all good. It's like we're defending freedom there. So, you can forget about all this stuff. It's too late.
But ultimately, you're calling a demand destruction argument as compared to a supply concern one. Kate, under those terms, OPEC would have to be looking at a cut again, it would appear. If that scale of demand destruction is around the corner, there's a lot of supply then, with Russia being essentially at par and Iran coming back and et cetera, et cetera. We've just come through 2 years of OPEC recovering all of its production loss from the COVID years. There's ample supply, and we're now at the doorstep of a demand destruction cliff, it would appear, listening to the commentary this morning.
Well, I mean, I think they're just going to wait and see because, they're meeting every month now. And this, let's face it, they're not really supplying all the oil that they say they're going to supply. So that 100,000 barrels a day increase is really nothing. It was a drop in the ocean. And they're still, way behind on, a lot of their members just can't produce at their higher quotas. So that's why I said there is supply uncertainty unless Iran comes back. If Libya stays on the same track, producing 1 million plus. So all of these factors, I think, they were more than 1 million below their targets. And Russia is down slightly, not by very much. There's been more of a redirection of crude more to Asia. But again, we go back to gas because that feeds into more demand for oil. If gas prices are going to stay high, they may have come off as slightly, but if they are like 4 times the price of oil, you're going to have fuel switching. You're seeing already in the Middle East, you're seeing more crude burn, more direct liquids burn for power generation. It's a very hot summer there.
Which is another reason why you might say that demand for oil could remain upward for all of the different reasons. Let's get Osama and see if he's figured out his technical problems, because I'm quite keen to get your views, Osama, on how significant from Pakistan's point of view would be an Iran nuclear deal and for the region.
Yes, can you hear me now? Am I audible?
Perfect, clean.
Okay. So I was listening to the discussion, and one thing that I would like to contribute, maybe add up very briefly, is that while I agree that the bearish factors, let's call them, are piling up recently. Chinese demand and interest rates rising, dollar strength that can bring down the oil prices. However, we should also be mindful of 2 things. That the rhetoric is also turning red, as I say, as in China accused US of direct involvement, being the main instigator in the Ukrainian conflict. IRGC was accused of plotting a murder against John Bolton, the former Trump's national security advisor. Similarly, Pelosi's visit to China, I mean, if it remains into the economic domain, trade war, yes, that's a bearish factor. But if it involves more military drills, more rhetoric escalation, maybe a little bit of skirmish or something, that can be really bullish. And finally, to quote John Mearsheimer's essay recently in Foreign Affairs magazine, the war in Ukraine has still not ended. The markets, the observers, the traders, we might have sensitized, we have become desensitized to the developments there, but it still has not ended, and it has to end. It cannot go on perpetually. So, and the essay really incredibly explained 3 or 4 scenarios under which we can see an all-out escalation, because it has to end at some point. And what I am looking at, and the most visible one, was that it prolongs so much that it starts to eat away at Russia's logistic, administrative, and other monetary expenses, right? And Russia would have been left with no option but to escalate, to put an end to it. So that's one thing that I want to just put out there. Regarding the Iranian nuclear deal, I think it's been a lot of weeks, it's been months. We don't still know the text of their reply to the European Union. It has not been made public. They're still brooding over the recent developments, like Iran pulling out all the security cameras from the nuclear enrichment sites, and not allowing IAEA to visit the sites, and whatever I said recently about IRGC being accused of murder. I think the recent developments, I think they're not symptomatic of something really positive. I think it's a 50-50% chance still, because let's be honest, there are still hardliners in Iran that wouldn't want this to happen, because they need a scapegoat always. So I mean, but if it happens,
of course, it's also quite. I mean, it puts Biden at having. I mean, he's already at record low ratings, but ultimately, after 1 or 2 victories, to concede to Iran might be seen as a weakness. Let's get the survey question before giving everybody a last word chance to comment on the survey question, which is really about direction for the market. What will have the biggest impact in determining the direction of oil prices in September after market actors return after their summer holidays, or in case of Omar, not return, staying in the south of France, getting a job selling ice creams on the beach, and enjoying all the windfall he made in the first half of the year. The sell in May, go back in October approach to markets. But which of these do you think will give the biggest impact in determining the direction of oil prices in September? We've seen obviously oil prices give up their Ukrainian premium. At least Kate says there's still premium in there, but before the war started, we were around 1995. That's where we are now. So just from a technical point of view, we've given up that $30 of the Ukraine premium. But which of these do you think will give direction to the market after once September kicks off? And we'll go around the table and ask everybody their view on this. Can I vote? I cannot vote. It's not letting me take a vote. Is it? No, it's not letting me vote. Why is that?
Same.
Oh, both host panelists cannot vote. Since when? Well, host panelists should be able to vote. Maybe they'll fix that. Omar, if you were to pick one of those, would it be none of the above by your comments?
I didn't see any of the.
Okay. You didn't see, but okay. So you had all of the subjects we were talking about today: the war in Ukraine, Iran deal, the Fed rates. Any of these give direction to the market in September? You're saying no. It'll be essentially none of the above, which was also an option.
Yeah, none of the above. None of the above. And I think basically the one thing that I would say is that I think again there's a misconception. It's basically not the Russians that can't continue over the long term. It's the West. See, the Russians, winter's coming, which is in Russia's favor. The West is financing this war, which is because oil prices and gas prices are high, which is in Russia's favor. Russia can manufacture armaments, and they're doing it. The West can't. The West needs like 3 to 5 years to replace anything. So the problem is that time is not on the West side. Time is basically on Russia's side. So all they've got to do is just stay there. And the West is going to basically, they won't know what to do. Winter's coming. They have no clue. Here in France, they have absolutely no clue. It's not just electricity. 40% of the nuclear fuel that they use in France is supplied by Russia. Same proportion of nuclear fuel that they use, enriched uranium that they used in the US, is supplied by Russia. You know, it is so bad that, but I mean, you know, eyes will open as we get closer to winter. Now it's summer, you know, soon it's going to be, you know, we're going to have winter. So I think eyes will open and we'll realize what we've been sold, so to speak. So it's going to be
none of the above is Omar's call on this poll. Kate, yours? One of these.
Iran, I don't know. I think the Iran nuclear deal was already factored into the market, you know, one way or another. I think China's slowdown. Yes, we keep talking about pent-up demand. The Chinese aren't traveling as much as they were. So because they're afraid of getting stuck somewhere and then being in quarantine. So I think that's, there may be pent-up demand coming from China, but I don't think that alone is going to have that huge an impact. War in Ukraine, I think, will drag on the market, but I think, again, it's become a sort of chronic situation. One thing we mustn't forget, and it's not on the list, is refining capacity. You know, it doesn't matter how much crude supply you have if you cannot turn it into, you know, if you can't refine it. I mean, I was looking at flights to Dubai the other day, and, you know, I do this tracker, and the price has been shooting up and coming straight down again. I mean, you know, it's quite mad, and I think that's partly to do with the fact that you don't have enough refining capacity, and you're not going to get any, except maybe from the Middle East, and that's really it. You know, let's not forget Russia, diesel, as you know, diesel and gasoline and all that. So that's having an impact on the market, I think. So it doesn't really matter how much more OPEC produces or how much less.
Last word to Osama. Which of those do you call, Osama?
If you look only at the oil markets in isolation, I believe the Iranian deal, even though it has been priced in, the announcement, the headline, the wording of it would certainly shed off a few dollars off the oil price. Oil prices, however, from a holistic point of view, rising interest rates will continue to feed into recessionary fears and maybe, you know, stoke demand destruction sort of narrative. So that's the two I would go for.
Yeah, I think just to wrap up, there's two things that kind of that take note in the last few days. But the killing yesterday of the daughter of the advisor of Putin in Russia, that is not an insignificant moment, I think, as to where what dominoes fall on the back of that. Obviously, who done it, but also the perception of who done it. Is quite important. So these factors, like moments like that, are unknowns, and given, I mean, the whether the Fed does 50 basis points or 75 basis points, maybe in the immediate macro sense of things, has some impact on equities, but the sentiment difference is quite massive. So there's these unknown pieces that could trigger direction in one way or the other. And while moments like that can still impact so much, I tend to think we're going to stay elevated rather than down, would be my sense. And hence why Omar is not going to trade. He's going to enjoy his ice cream in the sun. Omar Najia, lovely to have you on. Look forward to seeing you back in town. Kate Durian, hoping you're coming back to town. And Osama Rizvi, soon, inshallah. Osama Rizvi, thank you so much for bearing through your technical challenges there. Here every morning, 10:30 UAE time, the 4th season of the Daily Energy Market Podcast. Thank you.